Good afternoon, everyone, and thank you for joining us for Centaur's 2020 interim results presentation. For those of you who don't know me, I am Swag Mukherjee, Centaur's CEO, and I'm joined by Simon Longfield, our CFO. I'm sorry that we're not able to meet in person today for what is our second virtual results presentation. We hope to do this in person again soon, but in the meantime, I hope that you and your families are keeping safe and well. Today, I will take you through the developments and highlights at Centaur over the last 6 months. Simon will then take you through the financial performance of the business. Finally, I will outline how Axiom and the lawyer are performing before turning to our strategy and what is happening to MAP 22, our 3-year margin acceleration plan. I'll then open the floor to you for any questions you may have. As you know, over the last 2 years, Centaur has undergone a radical transformation. In that time, we have streamlined the portfolio to focus on 2 sectors, the legal and marketing professions, and built a higher quality business with better margin potential. Behind this transformation is our vision, which is to be an international provider of market intelligence and specialist consultancy that inspires and enables people to excel at what they do within the marketing and legal professions. We do this through 2 businesses, Axiom, which stands for Excellence in Marketing. All our marketing brands are now in one business unit, allowing us to capitalize on their synergies and to cross-sell our products. And the lawyer, the most trusted brand for the UK legal profession and a leading provider of intelligence to the global legal market. Both businesses are focused on enabling customers to excel at what they do, offering advice on the capabilities they need to develop to succeed, information, intelligence, and news, and opportunities to connect, our sector-leading events, allowing clients to meet with their customers and potential customers. I would now like to take you through our highlights over the next 6 months. Centaur started the financial year well and built on the momentum from a strong Q4 in 2019. We were on track to achieve the revenue growth, benefit of the 2019 cost savings, and double-digit margin target set out under our margin acceleration plan, MAP 22. The disruption of COVID-19 led to a significant impact on revenues and EBITDA, but EBITDA was substantially sustained, as we will outline in greater depth later. Revenues dropped to 17.7 million as clients cut spending, a decrease of 27%. EBITDA decreased from 1.2 million to 1 million, and EBITDA margin increased slightly from 5% to 5.6%. Following the onset of COVID-19, we moved decisively to further reduce our costs with measures that included halting recruitment, furloughing approximately 25% of our workforce, reducing board and senior management remuneration, and decreasing non-core marketing expenditure. We are now at a point where the steps we took to minimize costs have largely offset the revenue loss caused by COVID-19. We will go into this in greater depth shortly, but as you can see from the chart on the right-hand side of this slide, the measures we took gave the business more breathing space to absorb the immediate losses brought about by the pandemic. We also took other steps to conserve cash, including postponing the dividend until we have more visibility. This was not a decision we took lightly, but we believed it to be prudent. We feel that this, combined with our cash of 8.4 million and access to an undrawn credit facility of 25 million, of which 10 million is covenant free, will ensure that the financial stability of the business going forward is maintained. While COVID-19 has negatively impacted revenues, the investment we made in developing our digital capabilities in recent years helped us to adapt our products and services to offer customers what they needed during this uncertain time. We will provide more detail on this later in the presentation. For Axiom, the mini MBA implemented an e-commerce facility to attract single-user MBA candidates, supported by an enhanced marketing campaign targeted at employees working from home. This was very successful and contributed towards a doubling of delegates in the period. E-consultancy suffered as a result of COVID-19 and responded by converting some face-to-face courses to online training. The feedback from customers has been positive. The new influencer intelligence platform launched last year increased renewal rates and was generating good levels of new business going into 2020. However, its target customer segments were badly affected by COVID-19. Despite this, we are confident that the market will recover, and we are continuing our planned product enhancements for launch in half two, including campaign management and e-commerce. And looking ahead, the Festival of Marketing has been repositioned as a paid-for online learning, development, and networking experience in October. On a separate note, market makers experienced a sharp fall in revenue due to the crisis, as several of its major customers were hit by disruption in their own markets. We have since taken decisive action to restructure market makers with the aim of making it a smaller business focused on the really B2B marketing agency by the autumn. The Lawyer has seen a substantial increase in clicks on its website. From January to June 2020, we had an increase in active users of 18% compared with the same period last year. What's particularly pleasing is that led to an increase in total visits of 46% and an increase in daily and weekly visits of 31%. Having this data to hand to explain engagement around platform has supported our successful subscription renewal efforts. In quarter one, we launched Horizon, which is a daily early morning email aimed at the long view. It is data rich and gives strategic food for thought about competing in the business of law. This has been instrumental in enabling the Lawyer to increase usage at partner level in the major law firms. Our decision to postpone our half one events to half two was driven by the COVID-19 situation. We are now planning to hold these online. These digital capabilities were instrumental in seeing the Lawyer named Business Information Product of the Year at the PPA Awards, which are regarded as the industry Oscars. With that, let me pass you to Simon, who will put some more flesh on this and discuss Centaur's financial performance in more detail.
Thanks, Swag, and good afternoon to everybody. Turning to our financial results, strong momentum at the end of Q4 was carried into 2020. We had completed our 2019 cost-saving program and were on track to meet our MAP 22 targets around revenue growth and the double-digit margin target for 2020. COVID-19 knocked this off track and revenue fell 27% to 17.7 million over the course of the first half of the year, and on an underlying basis by 18%. The impact of lockdown is severely affecting trading, with the positive start to the year being offset by a fall of revenue of 30% in Q2 due to many customers cutting their spend. EBITDA fell at both Axiom and the Lawyer. At Axiom, it is now 2.1 million, a drop from 2.9 million in the same period in 2019. At the Lawyer, it is now 0.6 million, a drop from 1.7 million. However, we have significantly reduced central costs from 4.4 million to 1.7 million, and as a result, group adjusted EBITDA only fell to 1 million in this half against 1.2 million pounds in the equivalent period last year. And EBITDA margin increased over the same period from 5 to 5.6%. While this is admittedly less than the double-digit EBITDA margin as set out under our MAP 22 framework, which was disrupted by COVID, we continue to make progress. The group statutory loss is £13.9 million. As Swag touched upon earlier, there's been a significant restructuring at market makers, and this led to the loss of around 130 roles, around half the total employees. We're currently assessing the impact of discussions with our key customers, and it is likely that there will be further restructuring at market makers. The reduced size and profitability of the business required us to make an impairment charge of £11 million against goodwill, and the majority of the restructuring provision of £0.6 million that are included in the statutory loss. We have a strong balance sheet and have cash in the bank of £8.4 million at 30th of June. But we took the difficult decision to suspend the dividend, which we will reassess when we have more visibility on the recovery from COVID-19. I wanted to note that alongside our cash position, we have an undrawn credit facility of £25 million. £10 million of this facility is covenant-free until 30th of September 2021. Looking at the cash flow statement, cash collection has remained strong throughout COVID-19, with only a small increase in debtor days, from 55 to 59 in the period. Cash flows include the benefit of a £1.5 million final receipt relating to Wells Street office, and £1 million of VAT has been deferred under the government scheme, which contribute to the significant change in working capital and will not be repeated in H2. Exceptional cash flows of £3.4 million in the period relate to the 2019 disposal and redundancy programme, and the prior year numbers include discontinued operations and the proceeds from disposals. With that in mind, we believe we have the financial resources in place to help Centaur to emerge from 2020 as a stronger and more resilient business. As Swag touched upon earlier, I wanted to give a bit more colour on how our cost-saving measures and digital capabilities have offset the damage caused by COVID-19. To start on the left of this EBITDA bridge, you will see that last year we reported adjusted EBITDA of £1.2 million. However, for a true underlying comparison, you need to adjust for certain factors, such as the planned discontinuation of Marketing Week Live in 2019, which contributed £0.5 million of EBITDA last year. The postponement of events at the Lawyer in H1 2020 into H2 means that the business missed out on £1 million of gross profit in H1. And the loss of £1 million in other income, namely transitional services related to our disposals last year and rental income for the period. So our underlying starting position was an EBITDA loss on an equivalent basis to this year of £1.3 million. The next two bars show the impact of the downturn in trading at e-consultancy and market makers, amounting to £3.5 million in total. This is where the impact of COVID-19 has been felt the most. And there was other smaller declines in EBITDA contribution from the Lawyer and our other Axiom brands. The measures we took to remove costs within the business were vital in maintaining its profitability. Over the course of H1, we were able to save £3.4 million in business unit cost savings from actions taken last year and this period, and £2.7 million in group overhead savings as part of our 2019 group overhead saving programme. And when combined with an increased contribution from the mini MBA of £0.4 million, this gives us the adjusted EBITDA figure of £1 million for the period. Some of the savings achieved during H1 were the result of furloughing staff, but we expect to maintain costs at a similar level in H2. We anticipate that any growth in costs, for example through increased headcount, will be driven by a pickup in revenue. And the upshot is that Centaur remains an EBITDA profitable business, and the measures we took to reduce costs have proven vital in helping us respond to COVID-19. Looking ahead, the performance of the business over the second half of the year depends on a number of factors. We have little visibility around the performance of the business beyond Q3, owing to ongoing COVID-19 related uncertainty. The new online format of our second half events makes forecasting difficult, and the performance of the Festival of Marketing and the Lawyer events in H2 will have a significant impact on our revenues. We are also dependent on the broader macroeconomic environment. As long as the economic and business outlook remains uncertain, it's likely that some customers will delay their purchasing decisions. Having said that, for H2, we expect a slight reduction in gross margins, reflecting the mix of revenue, No other income, as in H1. Business unit cost savings to be at least the same as the cost savings made in the first half when compared with the second half of 2019, and central costs to remain at the same level as in the first half of this year. We will provide guidance as soon as we have a clearer view of trading over the balance of 2020. I'll now hand back to Swag, who will give you more detail about how Axiom and the lawyer are performing, as well as a few case studies of what we're going to adapt, of what we're doing to adapt our offering to this new normal of online and virtual events.
Thank you, Simon. To start with Axiom, revenues fell to 15 million as a result of the pandemic, a drop of 4.7 million from the 19.7 million figure in half one of 2019. Over the same period, adjusted EBITDA fell from 2.9 million to 2.1 million. Market makers had a significant hand in this, and we have already covered the corrective action we are undertaking with that part of the business. E-consultancy was impacted by reduced customer levels as companies cut costs, and we have taken steps to move to online training and cut fixed costs as a result. Influencer Intelligence achieved good revenue growth in Q1, which is offset by a significant fall in Q2 renewals, resulting from many of its customers in the fashion and retail sector struggling. Overall, it posted flat revenues for the half year, which reflects a satisfactory performance in the context of COVID-19. Looking ahead to half two, we will add further product features to its platform. And Marketing and Advertising Solutions dropped 22% as a result of reduced recruitment activity. Despite this, we were encouraged to see a strong performance at Mini MBA. Revenues and delegate numbers more than doubled year on year. Mini MBA is a solid example of our product innovation over recent years, and we continue to expand its subject matter. Over the past 6 months, we have run add-on brand management courses and bespoke work for companies such as Flight Centre, Coles Supermarket in Australia, the Marketing Academy, and Westpac Bank. We're also seeing increased clicks on our online platforms. Marketing Week has 35% more unique visitors in the past 6 months compared with the same period last year, and 17% more found the website through search compared to 2019. Turning to the lawyer, revenues fell to £2.7 million from £4.4 million in the first 6 months of last year, and adjusted EBITDA fell to £0.6 million from £1.7 million in the same period. A sizable proportion of the drop in revenue and £1 million of EBITDA can be attributed to the postponement of the lawyers' events in half one until the second half of this year. The majority of renewals took place in the first half of the year, and we were pleased to see a renewal rate of 106%. This is at a time when the legal sector is being impacted by the pandemic, demonstrating the faith the leading law firms put in the brand. However, COVID-19 has also impacted recruitment and other advertising, which has reduced by 36% over the past 6 months. As a result of this, our premium content revenues grew by 13%, again demonstrating the value our customers see in our content. And, as we mentioned earlier, the lawyer was named Business Information Product of the Year at the PPA Awards, a well-deserved accolade for the team. As we touched on earlier in the presentation, CENTAUR's digital capabilities have played an important role in allowing us to continue servicing our customers during this global lockdown. I'd therefore like to spend some time looking at what we have done to virtualize our events and training businesses. Starting with Axiom, for the Mini MBA, we ran a much stronger marketing campaign to drive people towards its online capabilities, especially during lockdown. This, together with the high number of e-commerce students, has improved our conversion rates and delegate numbers. For e-consultancy, our strategy of blended learning was face-to-face training combined with an annual subscription. As a result of COVID-19, we have shifted to delivering this training virtually. It has received very positive feedback, and we will continue to deliver virtual courses given many of eConsultancy's clients are international. The Festival of Marketing 2020 will, in some ways, be our most ambitious yet. It will expand from the previous 2-day format at Tobacco Dock to comprise 80 sessions across 5 days, with the biggest names in marketing joining to address a different marketing issue each day. These are Monday, delivering for customers; Tuesday, achieving creative effectiveness; Wednesday, leading change; Thursday, setting strategy; and Friday, driving recovery and returning to growth. At The Lawyer, In-House Financial Services 2020, which we call IHFS, was our first major virtual event and is a good example of what we have been able to do through the use of digital capabilities. The 3.5-day virtual conference was attended by over 220 people and included exclusive virtual roundtables with hand-picked attendees and full plenary sessions. Networking was encouraged through live Q&As, polls, messaging, and a chat roulette function, and we were also able to include sponsor branding throughout, often through video content. In fact, the Net Promoter Score from the event was over 45, which is as high as for the equivalent face-to-face event. From a financial standpoint, the event also matched its face-to-face equivalent in terms of profit. Overall, the team did an excellent job in putting together such a comprehensive event in a short time frame. Having looked at what we've achieved over the last 6 months, I'd now like to talk to you with regards to our strategy going forward. As some of you will know, last year we outlined our MAP 22 strategy, our plan to achieve an EBITDA margin of 20% by 2022. Following our radical transformation in 2019, we picked up substantial momentum at the end of last year and started 2020 strongly. Our business was performing well, our overhead costs were down, and we were on track to deliver our MAP 22 targets. Despite the disruption brought around by COVID, our objectives remain the same. This slide shows the progress we are making and sets out the key areas of focus which all align to an overall strategy of increasing margins, improving the quality of our revenue streams, and reducing our overhead costs. As demonstrated by the blue ticks, we have delivered on a number of these objectives. The traffic lights represent the progress we're currently making, green showing that we're on track, amber representing areas that we are assessing our approach based on the impact of COVID, and red indicating where we have faced difficulties. In terms of completed objectives, our e-learning business has continued to grow, the pandemic in fact accelerating our digital development. In advertising, the creation of Axiom Labs has improved our ability to sell marketing solutions focused on longer-term cross-media deals with key accounts. And we've also delivered against our overhead cost-saving objectives, exceeding our targeted £5 million to achieve £6 million annualized reduction. We have more work to do, and clearly COVID has proven a significant obstacle. If it weren't for the pandemic, we expect that our ambers would be green for the Festival of Marketing and The Lawyer. I would expect eConsultancy to still be amber. That said, our areas of focus remain the same, and we are confident in our ability to achieve these, encouraged by the resilience of the business that it has shown during this period of uncertainty. Hopefully, this presentation has given you a clearer understanding of the last 6 months, the impact that COVID-19 has had on CENTAUR, and the measures we have taken to offset it. It's been a busy time. We started the year well, building on the momentum we achieved in Q4 2019, and we're on track to deliver our MAP 22 targets around revenue growth and the benefit of 2019 cost savings. When COVID hit, we took quick and decisive action to mitigate its impact. Our products and strengths were adapted, spending cuts implemented, and our balance sheet strengthened. Our ability to harness technology to continue to serve our customers has been a crucial element of this resilience, and is an area we can continue to grow. It's worth noting that the setup of full working from home would have been a lot more challenging during our time at the previous office. The new setup in our new office meant we could shift to working virtually swiftly and keep the business going. We are already identifying opportunities where we can adapt our offering to support customers as we come out of lockdown, and our diverse range of products, strong balance sheet, and our undrawn borrowing facilities leave me confident that we have the resources to emerge from 2020 as a more resilient business, well positioned to take advantage of future opportunities. Finally, I would like to thank our staff for all that they have done over the last 6 months, and I'm incredibly grateful to them for the tremendous resilience and flexibility they have shown in these difficult times. Thank you for listening, and we'd now be happy to answer any questions that you may have.
Swag, Simon, thank you very much for updating investors. Just while we give investors a few moments, I'd like just to pop out the following poll, please. And ladies and gentlemen, do continue to submit your questions using the Q&A tab, but just while we give the company a few moments to review those investor questions already submitted today, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard on the Investor Meet Company platform. Lastly, before I hand back to Simon and Swag, I'd like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company better understand your views and expectations. Swag, Simon, I know I haven't given you a great amount of time to review some of the questions that have come in, but can I hand back to you and where appropriate, just if you could read out the question and just deliver an answer on the ones that you'd like to come back and submit?
Certainly, thank you very much. The first question is from Jake D. He says, do you see any acquisition opportunities moving forward to accelerate growth? Jake, thank you for the question. At this moment in time, the focus of Centaur is to focus very much on delivering operational excellence from the excellent brands it already has. And we may augment these with acquisitions in the future, but at this moment in time, there are no intentions of making any acquisitions. The second question is Nick J. Is the acceleration of digital delivery a bigger opportunity to increase margin? Absolutely, yes. This is one of the objectives of the business. As we move from being a traditional publishing business to a business intelligence and information business, the idea is we get economies of scale from growing our revenue streams whilst not having to grow our cost as much. Third question is from Jake D. Thank you for the update, very helpful. What amount of your revenue is recurring, and typically how long are your contracts? Perhaps I could also ask, if possible, what is your typical sales cycle? Thank you once again. I'll hand that over to Simon, please.
Thanks, Swag. We provide in our annual report, we provide a view on our recurring revenue, and in particular, the subscription part of our business, which is in the premium content revenue, as well as quite a bit of our event revenue, and also some of our revenues within marketing services. We review those, we regard all of those as what we would say is recurring revenue. I can't find the exact figure to hand, but it was over 60% in our annual report for 2019. It's more difficult to provide that on a half year by half year because of the seasonality, particularly around events and obviously the deferral to the second half of the year. But absolutely that figure is going up year on year and is driven by the subscriptions or premium content revenue streams that you will see in our segment and revenue analysis notes. Typically, the contracts, obviously the subscription, as you might expect, the subscription income is normally annual contracts. We don't have any, we don't have longer contracts than that. Those are all annual. But then other streams of revenue in our business are shorter contracts and might typically be 2 or 3 months, for example, for sort of consultancy or training revenues. And in terms of sales cycle, again, that varies depending on the revenue streams that we have, and again can sort of take from anything from 2 or 3 weeks for some of the shorter revenue streams like advertising and marketing solutions, but might be several months in terms of the sales cycle as we head up towards an event or getting new business on board for our subscriptions.
Simon, thank you very much. Thank you, Swags. Thank you, Simon. I think you've addressed those questions from investors that you can. Obviously, with the company, will review all questions submitted today, and they'll publish the answers on the Investor Meet Company platform. So perhaps I could just finally hand back to you just to wrap up before I redirect investors to give feedback, if that's possible.
Certainly. Thank you very much. Thank you, everybody, for signing in, and thank you for the questions that you asked. This is a business that is very determined to take advantage of the developments it's made over the last few years and adapt its products to what we undoubtedly think will be a changed world once we come out of COVID-19. And we're very well placed, we believe, to achieve our margin acceleration plan, which is to get this business up to a 20% margin in the next 2 to 3 years. Thank you very much for listening. And if you have further questions, you can always contact us via our investor relations button on the CENTAURmedia.com website. Thank you.
Swag, Simon, thank you very much for updating investors today as part of your roadshow. Could I ask investors not to close the session? You will be automatically redirected for the opportunity to provide your feedback. If you access the meeting from our website, the feedback page will appear in front of you. If you came through the email invite in the link, you'll be requested to log in before being able to do so. Lastly, I would like to say thank you on behalf of CENTAUR Media, Investor Meet Company. Thank you for attending today's presentation. That today concludes today's event.